Welcome to Value Vest Daily. Just a quick reminder right off the top, this is not financial or tax advice. Instead, what we've got for you today is an in-depth explainer on a truly fascinating market event. We're looking at how one particular stock potentially turned a $1,000 allocation into a massive $273,000 in just 8 trading days. I mean, wow. Okay, let's dive right into this. The stock market is full of surprises, but it's incredibly rare to see a fundamental pivot align so perfectly with this kind of massive retail momentum. Today, we're breaking down the science, the data, and the exact market mechanics behind this crazy scenario. $273,000. Think about that for a second. That massive number represents the potential return if you caught Rackspace Technology's explosive 273% surge in the first week of May 2026, going from $1.50 to $5.49 literally in the blink of an eye. That's the kind of parabolic move that absolutely demands our attention. We have to ask ourselves, right, what fundamentally shifts in a company's DNA to trigger this kind of violent upward trajectory?
The sheer scale of this breakout is just staggering. We saw massive green candlesticks bursting upward as retail volume completely exploded, trading at literally 18 times its normal volume. Traders were frantically hunting for the next big AI winner, and, well, they found this. But, momentum like this can be deceiving. So, is this pure hype? Or is there an actual, genuine technological breakthrough anchoring this rocket ship? That's exactly what we're going to figure out together.
To do that, we're going to follow a really clear roadmap today. We'll start with the explosive May catalyst, explain the cloud plumbers, break down the AMD AI partnership, analyze the valuation and momentum fever, confront the real risks, and finally, wrap it up with our outlook and final verdict. All right, let's kick things off with Section 1, the explosive May catalyst, looking specifically at their recent earnings and agreements. So let's fast forward to May 7th. Rackspace dropped a bombshell first quarter press release that just completely changed their market trajectory. First off, they reported $678 million in revenue, handily beating Wall Street estimates, but more importantly, they actually swung back to a GAAP profit. Now, for a stock that had basically been trading like a beaten-down penny stock, proving profitability is a massive hurdle cleared. But here's the thing. The real catalyst, the true market bomb dropped in that exact same press release, was the announcement of a brand new Memorandum of Understanding, or MOU, signed with the semiconductor giant AMD. Guys, this wasn't just a financial beat, it was a total narrative shift. Moving right along to Section 2, the Cloud Plumbers Explained. Who exactly is Rackspace? Before we get completely swept up in all this AMD AI hype, we really need to step back and look at who Rackspace actually is. Because, look, they aren't just some random crypto miner or a brand new SPAC trying to capitalize on a buzzword. No. Founded back in 1998 and operating over 30 global data centers, they are what we like to call the essential plumbers of the cloud. They don't just rent out server space. They design, build, and fully manage the entire complex technology stock for Fortune 500 companies, sovereign governments, and huge hospital networks. When public hyperscalers get far too complicated or restrictive, these are the folks who get their hands dirty and make sure everything actually works on the back end. They've been kind of ignored for years, but suddenly all that existing hardwired infrastructure is looking incredibly valuable. And that brings us perfectly to Section 3, the AMD AI partnership and the creation of a totally new category. The core technological problem driving this massive surge is honestly fascinating. Up until right now, the whole AI boom has been almost entirely about public hyperscalers, those massive NVIDIA-dominated public clouds. But here's the massive problem. Those public clouds are often completely non-compliant for strictly regulated industries. I mean, you can't just throw highly classified or protected data into the public ether. It's a huge no-go. Enter the Rackspace and AMD partnership. They're teaming up to build a governed enterprise AI cloud. What does that mean in plain English? It means putting dedicated AMD Instinct GPUs and EPY CPUs inside Rackspace's private, highly secure, fully managed operating model. It is a completely new category of AI infrastructure, designed literally from the ground up for strict compliance and data sovereignty. So the absolutely crucial point here is understanding who actually needs this stuff. This specifically targets the next $1 trillion in AI spending. Think about it. We're talking about massive banks that actively avoid public clouds due to crazy strict financial regulations. We're talking about vast healthcare systems operating under strict HIPAA compliance, where patient data security is entirely non-negotiable. We're even talking about sovereign nations and defense contractors demanding that their localized data never, ever leaves their country's borders. These entities have billions of dollars budgeted for AI development right now, but until this moment, they've had absolutely zero compliant places to run those massive, complex AI models. Rackspace and AMD are essentially building the exact high-security vault they need to operate in. If they sign even one major sovereign or healthcare giant to a multi-year contract, the revenue visibility for Rackspace just becomes massive. Let's shift gears and look at Section 4, Valuation and Momentum Fever, which is where deep value investing directly meets pure market hype. When evaluating a stock like this, we always want to look at the underlying value, ideally seeing if it's a strong buy based on a strict discounted cash flow, or DCF model. Now, while multi-year cash flow projections are still a bit muddy in the middle of this turnaround, the comparative data we do have paints a really fascinating picture. Pre-surge, Rackspace traded at a price-to-sales ratio of 0.4 to 0.5. Even after this massive run, which brought its market cap up to $1.4 billion on $2.7 billion in expected revenue, it still sits at an absurdly cheap half a time sales. I mean, compare that to the pure AI plays out there. Those guys routinely trade at 10 to 20 times sales, with market caps in the tens of billions of dollars. So what we're looking at here is a classic value setup, but wrapped in a secular momentum tailwind. It's kind of the holy grail for a certain type of trader. And let me tell you, that momentum is fierce. The retail sentiment on platforms like StockTwits went extremely bullish almost overnight. Traders started comparing it to other explosive early runs, throwing out massive future price targets right and left. And because Wall Street analysts hadn't even had the time to fully update their models or price targets yet, I mean, a lot of them were still sitting around $2.17 from before the news broke, retail momentum was able to just completely take over the narrative. They absolutely torched the short sellers, and as we saw, pushed the volume to a staggering 150 million shares in a single day. Technical resistance levels, yeah, they were utterly broken. Which brings us to Section 5, real risks to consider. We've got to keep it honest. Look, a stock does not trade like a penny stock for years without carrying some significant baggage. And as an explainer dedicated to giving you the full picture, we have to look at the sober reality here. Full disclosure, this is absolutely not risk-free. First and foremost, remember that AMD deal? It's currently a non-binding memorandum of understanding. That means it's an agreement in principle. It is not a signed definitive contract just yet. Secondly, the company's debt load remains a very real heavy burden on their balance sheet. Yes, they had a great Q1, but historically, they still battle overall gap losses and cash burn. Finally, let's not kid ourselves and pretend the tech giants are just standing still. Rackspace faces brutal, fierce competition from private cloud offerings by behemoths like Azure and AWS. If the definitive AMD deal drags on, or if they miss their next guidance, this stock could easily give back half of its gains in a week. Never bet the farm, guys, and always size your positions properly. All right, finally, Section 6, our outlook and final verdict. Let's look at the turnaround trajectory. So, considering the explosive catalyst we talked about, the undeniable value metrics we mapped out, and those very real execution risks, what is the ultimate trajectory for RXT? Well, in the short term, pure momentum dictates that this could easily test the $10 to $15 range, especially if that definitive AMD contract gets officially signed. Or, better yet, if they announce their first major sovereign or healthcare customer. That would basically validate this entire thesis overnight. Long-term, however, is a completely different game. Long-term success requires near-perfect execution from their management team to capture even a tiny sliver of that highly regulated AI market. But if they do manage that, this pivots from a high-risk turnaround into a multi-billion-dollar AI infrastructure franchise. So we're going to leave you with this final question to chew on. Is RXT the hidden 10 to 100x AI data center winner, or just a fleeting momentum play? It's a truly fascinating intersection of deep value infrastructure and bleeding-edge AI demand. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. We drop these deep dives every single market day. See you on the next one.